What's good, everybody? Dustin Tibbetts, financial advisor with Jazz Wealth. We're going to do this one quick today for the stock market update. Running a little bit behind, but we are going to start doing these at 4:30 New York time. So that way you've got a little time to kind of digest, get some things ready. We want to make this more detailed. Got lots of cool things in the works for you guys, but we're here to talk about the markets. If you're not one of our customers, check us out. If you need help with your retirement investments, a lot of our customers are also traders. And so I find that a lot of our customers, they want to talk about trading, but they don't want to have that bias of the investing. So if there's someone that, you like to buy, and let's say you like to trade and you're trading on the short side, you want to short Apple or something like that, and that might be part of your retirement. This internal bias happens, I find. And so a lot of the traders that we work with say, you do the retirement, I'll do the trading. We can meet in the middle and talk about it. And so that's kind of what we're doing here today. Just really updating you on the markets. We will go across to that, of course, in just a moment. But if you want to see the performance of our portfolios, we update them every Saturday afternoon. But it's also right on our website. Just click portfolios. You can check it out. Also, for our customers, check the events tab. We're going to update that hopefully later, hopefully in a little bit, but most likely next week. So that'll tell you what's going on at Jazz as far as the classes that we offer for our customers and sometimes to the public as well. So be sure to check that out. Also, we did a video this week. Why don't you pay trading commissions here at Jazz Wealth and some other companies? What's the deal with that? What's going on? So we covered that in great detail, exactly how that works. But today's the end of the quarter, right? So that's it. End of the quarter, right? We did a video today on checking in on your retirement accounts. Now's the time. Do it before Amazon gets a hold of you and everything else. But it's also a time where the stock market doesn't really behave in a emotional sense. Let's put it that way. So if we go over to the charts, I want to just show a few things here. We'll dig into, I might be in the way, actually. Oh, no, it's not too bad. So when you get to the end of a quarter, what happens is portfolios need to be readjusted. We're going to adjust our portfolios next week, so we'll be talking about that as we do it. But what happens is, rather than people trading based on emotion, people are making adjustments based on rebalancing and necessity of the positions they need to have. A lot of people like to say, oh, it's the time where they window dress, meaning they sell off the losing positions in your mutual fund and then add that to your winning position. So when they send you the statement, everything looks great. That's not the case at all. I was on that side of the business for a while. You can't. You can't do it, right? So when we refer to window dressing, what we're essentially referring to is making our portfolios look as good as possible. We don't care about your statements or whatever happens there. We want our portfolios to be in the best shape possible to present to you and, of course, to the rest of the world. So the whole window dressing argument is just from people that have never been on that side of the trade before. So that's that. And our printer has just decided it's going to print whatever it feels like printing. You send that? All right, well, that's what's going on there. Let's take a look at the stock market today. You got the Dow. Started off great. Was a great start to the day. Everything was looking really good. By the end of the day, left a little bit to be desired, to be honest, and that is your window dressing, so to speak. So you can see on the charts there, you've got the stock market higher to start the day. Of course, and the Dow finished off the highs. Not cool, man. We'll go into the financials there because that one really stuck out. Started the day higher. Yay, bank stress test. We're raising dividends. Everything's cool. We're going to buy back shares. A lot of the bank stocks started higher. Not the trading stocks, the bank stocks. And so by the end of the day, they traded off the highs. They closed almost all the way back where they started. Nobody likes to see that. And so where you had earlier in the day, how high was the Dow? We were over 100 points at one point. I don't track the Dow so much during the day, but the Dow closed higher by only 55. The S&P only added 2. That's not even worth getting up for, right? What's 2 points? And the Nasdaq was higher by 6. So really, if you're looking at the charts here on the screen, banking. We've made a big deal out of that all week. The banks just won't participate. You need the banking stocks and you need the tech stocks, however you want to look at them. You need them to go higher in order to have the markets higher. If this is your first time tuning in, you're watching this, we really harp on that because it's a fact. It's not our opinion. Other channels focus on their opinion of where stocks want to go, what may happen or whatever. I chime in with that every now and then. But for the most part, you need the banks and you need the tech stocks. Just didn't have them there. Emerging markets, right? One of the worst performing areas of the market so far this year. I believe gold beats it actually, but whatever. Emerging markets. Look, this sell-off here, can you see it nicely? Good sell-off, very consistent. Nothing to worry about. Most people, when they see a downtrend like that, wouldn't panic, wouldn't do a single thing with it. But as soon as it starts to rapidly fall, notice the difference? Take a look at phase one over here, slow and steady, just people that don't want money in that sector anymore, and they're moving on to other stuff. No panic or anything. And then all of a sudden you hit like June 15th, and it's like, wait a minute, rapid sell-off, rapid acceleration to the downside. That's a little more fear. So that's kind of how you see that on the charts. But what it also does is it gives people the opportunity to buy at a discount, right? Imagine if this was the stock market and this thing is falling. You're like, okay, I can handle that. Oh, a little more, no problem. Oh, a little more, not such a big deal. But when it falls rapidly, that's when you go, wait a minute, that's not comfortable, but isn't that a severe discount right there? Yeah, why don't I buy some of that? And so that's what you saw in emerging markets on the last 2 days of the week here. So I'm happy with that, right? Emerging markets is one of the underperformers for us. And remember, we operate on speed, not on picking great stocks or whatever. So that one's holding us back a little bit. Great day for that one, actually, up 1.5%. Let's go over to some stock news here, and then I'll dig through any questions if you have any. If you're watching live, Friday is usually a quiet day. Most people don't join us here, but that's cool. Nike, you see it on the charts there? Nike, about 12%. It actually closed the day up 11.33%. That's incredible. New highs, new 52-week highs on Nike. They reported earnings today, much better than expected. Revenue, earnings, all better, came in more than expected. And that is incredible. The stock is now higher by about 30% on the year. They got a lot of things they're working through with Amazon. Now, if you pay attention to Nike, they're getting crushed by some of the other names on Amazon. Better setup, looks all better. You don't see the fake products everywhere. Nike's made a big push to make that happen. That's going to be good. That's going to be one thing that people talk about going forward. Also, what people have been talking about, that's not it. KB Homes. Remember earlier in the week we talked about Lennar Homes, where it wasn't that they were doing good because interest rates were low. Now they were starting to do good. Sales were improving, and the price of the homes they were able to raise by 10%. The reason why is because of demand. And so that was great news for Lennar. KB Homes, if you're not familiar with them, they are also a home building stock. They essentially reported the same thing, that their sales prices are up by only 4%, but still, that's pretty good when you're selling expensive stuff like that. 4% for them. Their overall new orders were higher by 3%, really just replicating what Lennar said. Not as exciting as what Lennar was able to put forward this week, but not bad, right? The key to the home building stocks, right? Let's look at the XHB here. We'll do this one on Monday. We'll cover this at ETF here, but the home building stocks, the key to them, where they will start to move money into this sector, is when the company is standing on its own, meaning it's selling products because people want to buy them, not because they're discounted, not because there's some advantage by getting low interest rates that customers come and buy new homes. They want, people will invest in this sector when it can be said that there is demand for the individual products that they offer. Strip away everything else, that's when people will come back. And today was the first hint at that. I'm going to just put it out there. Everybody's saying they're not going to do very good, but they're proving you wrong. Hey, who's not doing really good here? Blue Apron. This company, to me, I don't know what to do with it. Like, if you want to invest in Blue Apron, I don't see how you have that concept. I don't recommend individual stocks, but if you said, Dustin, what do you think about Blue Apron? I'd be like, I don't know how you find that interesting to invest in that. There are so many other companies doing so many better things. I actually do a sort of a healthier, workout guy, buff guy, sort of meal planning kit. They just overnight the food to me. It's cooked, and then they send me the food. It's not expensive. It's cheaper than Blue Apron. And what happens is I get this massive box filled with dry ice, and inside of it is all these ready-to-go foods. And they're not junk either. It's like good steak, good rice, everything. You heat it up. It's good. Guy on a go, you can eat really, really well. Well, come to find out, HelloFresh has been paying attention to that. That's not the company I use, by the way. But HelloFresh has said, wow, these companies are killing it, right? The old Dustin's out there buying 50 meals a week from these things, and they just send these boxes. HelloFresh, based in Germany, has said, we might be able to get one up on Blue Apron. And so they announced that today. They're going to start testing that, sending you ready-to-go meals in your mailbox, or however they want to drop it off at your place. I think that's going to hurt Blue Apron. Here's the thing. From a technical standpoint, everybody thinks Blue Apron's about ready to pop. So you've got the stock basing sideways here. If you're a technical trader, you're looking at that like, okay, maybe it does take off a little bit. But if we zoom in there, that's what everybody wants. Throw in a little bad news. That might have held it back today. It still was up 4%. I don't know why, but it was up 4%, so that's not too bad. Let's take a look at a few other things. Oil. Have you seen the price of oil? If you just glance over there real quick, take a look at what oil looks like. It's like really good. There we go. Let's get that off the charts there. Oil on this monster move. First, you had the OPEC meeting. I don't know what they decided there. What a weird way to word things. But they decided basically on sort of raising their output a little bit, but putting some on storage and then some in the market. And it was weird. But anyways, everybody said, okay, bullish. That means less supply, more demand, of course, summertime. And then we start going into where the White House is jumping in saying, hey, listen, all of you around the world, we're going to tell you what to do, even though we shouldn't tell you what to do. We're going to tell you not to import Iranian oil. So how we have the authority to just go around, or how we think we can just tell people what to do is beyond me. But we do. And so that has also made the price of oil skyrocket, because you can't import Iranian oil. Of course, you maybe get it from the States, but that's almost impossible. And so you end up with less supply on the market. Look at what's going on in Venezuela. Whoa. I mean, these guys, imagine you had a business and you were selling stuff like Blue Apron. And imagine if for some reason people were ordering that food so fast that you got behind, and all of a sudden you've got some supply issues, big problems. Add that all into the price of oil. In addition to Libya this week, you had supply disruptions there, a whole slew of things, and you get a skyrocketing price of oil. So that's helped out all the energy stocks if you follow along. Some of the energy sector areas, or if you have oil service companies, that's not oil service, oil exploration companies, oil service companies, they've started to do kind of good there in the short term. So you got earnings coming up. We'll see what happens there. Bonds actually started, they were moving higher. Everything was looking good, and then all of a sudden they started pulling back. So not so bad there. What else do we have? That's really all I got for you. Kind of a short one today. Well, not short at all. Sorry about that. So if you have any questions, I'll take a shot. I'll see what I can do to try to help you out. Otherwise, we're going to wrap it up for the week. Going to try some new things this weekend. Lots of work to do. Just because it's the weekend, old jazz doesn't go away. What did Adidas do? Had some bad news come out today. That whole comparison thing. Do you move over to Adidas? Do you move over to Nike? That was sort of a big focus. Do you think the market will pop like tomorrow or Monday, or what do you mean? Did you see that sell-off end of day? Yeah, that's here. If we go back to this, that's what, how do we do it? Sell-off end of the day. That's why I put this on the chart. We were here. Everything was looking good. The market's like, yeah, what's going on? And we finished down here. What happened? End of quarter, right? Any other day with the financials and the S&P, I'm sorry, the tech stocks sticking up there, that market I think would have held. They just came for everything towards the end of the day, wrapping it up, get the last orders in before the end of the close of the quarter. It'll happen again next quarter. I mean, it's one of those things. Volume's always higher at the end of the quarter. If you're a brokerage firm, you're like, bring it. Let's do it. Everybody want to rebalance because they usually make commissions. Who doesn't make commissions off you? These guys, right? Go look at the video that we did about how all that stuff gets paid. We also did one on rebalancing there for you. We had a really geeky week, by the way, for our classes. Monday, Tuesday, Wednesday went a little bit further than I thought most of you would want to go, but it seems like everybody loves it. I like talking details, so if it helps you, that's great. If you have any video suggestions that sort of lead on to that, I'll go as detailed as you want, right? It only makes me look less stupid. All right, guys, I'm going to wrap it up there. Enjoy your weekend. If I can help you in any way, we will be here almost all weekend because next week's a short week for 4th of July. And so if you have anything that you need help or anything like that, let me know. I'll be here, and we will talk to you Monday.